Come to this particular question number 51. I've already told you friends that please do question reading by yourself. Okay. Now see, in this particular case, you are purchasing some machinery for 10 crores and 70% you are taken a loan facility. Okay. And this machine was acquired for extension of the business of the company and put into the effective production and all that. Okay, fair enough. On February 1. Okay. So see, in this particular question, one of the treatment that will be very much relevant is that interest on capital borrowed up to the asset being put to use. Okay, that is to be capitalized with the cost of the asset. So cost of the asset is going to be 10. Okay, plus it is going to be the interest. Okay, and interest will be up to 1st of February. So interest will be for the period of 10 months. Okay, and whatever the interest, it is 12% per annum. And treatment of the interest made and all that. So up to the asset being put to use. So how much is 70% loan facility? So 7 crore is a loan multiplied by 12%. Okay, multiplied by, it is going to be for 10 months. So 10 by 12. Okay, so this is going to be your interest. So 10, your interest is 10, 0.7, so your total cost is 10.7 crores. Okay, this is your total cost. Okay, now on this particular machinery is directly linked with this particular production, so it will be eligible for the depreciation and the additional depreciation. So depreciation is going to be, when did you put to use? You have put to use only on 1st of February. So you have used it for less than 180 number of days. So it is going to be normal depreciation 10.7 multiplied by 15%. Rate is given to us in the question. See, this is already given to us, and multiplied by half the rate. This is going to be your depreciation. Okay, and additional depreciation is going to be 10.7 multiplied by 20% multiplied by half, because if normal is half, even additional depreciation is going to be half. Okay, so assuming that all other basic conditions of additional depreciation is satisfied, so that is the figure. Okay, now and thereafter you are going to get a closing WDV. Okay, so total depreciation under 3212. See, total depreciation given under 3212. So this is something which the question will students 3212, what is that? So 3212 is a normal depreciation. Listen very carefully, but confusion will be, it is total. So students will say total matlab normal plus additional. This is how in the MCQ students will confuse. Okay, so here you have to say normal depreciation. Now total depreciation under section 32. Under section 32 will be your normal also and plus the additional depreciation also. And that figure you will have to select. Just take the total, whatever is the right number, that is going to be your answer when it comes to the MCQ. So that is something that you should not confuse yourself. Okay, and the last word, I'll repeat that additional depreciation, which is half the rate for this year, the balance half will be given to you in the next year. So that provision I've already explained that to you.